winning week that we're coming off, right?
Absolutely, winning week when you take a look at the overall week last week. But if you take a note of Friday's session, the indices have ended slightly in the red, but not much to worry about because US stock futures were little changed last night after a winning week as traders looked ahead to the Federal Reserve's interest rate decision and May inflation data. Wall Street is coming off a positive week for the major averages, with the S&P 500 having touched a record intraday high on Friday. The broad market index advanced 1.3%. Meanwhile, you had Dow that registered a 0.2% gain, almost 0.3% gain coming over there. Nasdaq has climbed almost 2.4%. Notably, it was Nvidia that notched another 10% advance last week as enthusiasm for the artificial intelligence darling pushed the chipmaker past the $3 trillion market capitalization for the first time. However, the Fed's latest rate decision and May's consumer price index are expected Wednesday, and they could prove key tests for the markets, especially after Friday's strong job reports continue to suggest that the central bank could hold off on lowering rates. Investors will pass through the Fed's updated projections on the timing and frequency of rate cuts. Markets are now pricing in one rate cut this year coming in November. This is according to the CME Fed Watch tool. And elsewhere on Monday, investors will also be keeping an eye on Apple's Worldwide Developer Conference, in which the iPhone maker is anticipated to make its latest software announcements. So that's been happening across the week last week when it comes to Wall Street. But Friday's move, Dow has ended lower with 0.2%, S&P 500 rather flat 0.1% lower, and you have Nasdaq also lower by 0.2%. But while that was US, let's also shift focus and take a look at what European markets did on Friday. DAX is closed lower by 0.5%, FTSE lower by 0.5%, and Stock 600 has also closed lower by 0.2%. Now, in terms of all the important events that you need to watch for when it comes to the US markets, remember you have Nvidia that is also going to be trading with a stock split this weekend, and of course the FOMC meet and the outcome is also going to be this weekend. So lots to watch out for when it comes to these global markets. But Shansi, while that was on the equity front, take us through what oil and other commodities are also doing.
Absolutely, and we're seeing very interesting moves there as well. So when you look at crude oil futures, you're looking at a third straight weekly loss coming in on worries that demand may be softening even as OPEC Plus plans to increase production. So US crude oil and global benchmark Brent sold off earlier in the week after OPEC Plus members announced that they would start phasing out 2.2 million barrels per day in production cuts starting in October. And poor US manufacturing data and weak private payrolls also weighed on the market as well. Now, oil prices have bounced back over the past 2 days on hopes that lower rates might boost demand, but the two crude benchmarks are still down about 2% for the week. So when you look at WTI, you're looking at $75 a barrel, down about 3 cents year to date also. The US oil is up 5.4% on the flip side though. When you look at Brent, then you're looking at $79 a barrel and down 25 cents is the kind of move that we've seen coming in for Brent. Year to date, that contract is also ahead by 3.3%. So that's the kind of moves that you're seeing for both contracts. Now, the OPEC Plus production increase would start when refineries are down for fall maintenance and then ramp up gradually as demand typically weakens heading into winter. Now, despite this, oil market analysts have still widely described this week's sell-off as an overreaction, noting that the OPEC Plus production increase does not start until October and the balances could tighten in the meantime. Now, JP Morgan and Barclays have said that oil demand growth remains relatively healthy. So that largely is the setup that we're seeing for oil. Let's shift focus to gold then. Gold accelerated declines on Friday after a stronger than expected US jobs report doused expectations for US interest rate cuts this year, adding to bearish sentiment driven by data showing top consumer China also held off on bullion purchases in May. So that was a double whammy coming in for gold prices, and spot gold last dipped 3.6% thereabout to around 2,300 per ounce level. So those are the kind of moves that we're seeing for gold as well, Sneha.
If you like this video, then like, share and subscribe to ET Now.